Hello traders, Nick Shaheen here looking at Snap. This is something I traded last year pretty successfully and I shared videos on it and hopefully some of you were on board. It had a big breakout, we were on board, nobody believed it, from like 12 to 18. So anyway, before I go on, at the end there'll be a subscribe button, hit it, and I think you also need to change the indicator to actually send you notices when I post new videos. Otherwise you won't know they're there. It's free. On YouTube. So also there'll be other links to classes and chat room. Back to Snapchat. I have a lot of lines drawn, none of which you can see yet. I have them hidden, except for this guy right here. I've had this as an alert to tell me, let's go. I had other alerts that triggered, but I didn't feel good about chasing them given my portfolio. One of them was down here. Nevertheless, they broke out from 1280, let's call it, and they tested it for footing, hence now they can go about their business attacking another neckline. So yesterday I think on CNBC somebody highlighted it as a stock to buy. I don't disagree. What I do disagree with is the timing, but that also depends on the personal trader time frame. By the way, nothing in here is a recommendation to buy or sell or anything. It's just my opinion as to where the levels that I see that make that are important to me. So this is a daily chart. So yesterday's candle was kind of indecisive. How do I know that? It's they opened and closed just about where they at the same place. Meanwhile, they tried to rally big time. They tried to fall a little bit, and they decided, you know what? I don't know. Let's wait another day. Here we are, another day. Is it up? Yeah, it's up. The market is in all-time highs, toying with it. Middle of the day fade. So there's nothing specific to it, except that they're still in the indecisive region from yesterday's candle. So if I saw the show yesterday, I wouldn't be buying it with two hands. What I would do is I would go online and place an alert somewhere on my platforms, or at least if I don't have alerts, watch for the breach of the prior failure. So the most recent failure is yesterday, and behind it there's a close one just above it at 1817, and one above it at my line 1837 or 38. So why buy it now? Not wait for the breach of either of those three, any of those three. So this is my perspective. So if somebody sees an idea and they jump on it right away blindly without looking at the chart, unless they have a very long time frame, then it's a little silly because nobody wants to start out red. They don't ring bells, and I'm not trying to find an exact spot, the perfect spot. I'm trying to find a spot that's not a mistake. This is not an ideal place to start based on a daily chart yet. So I could get granular and try to find lower time frames. So this is a 2-hour chart. So it tells me that, the same range, I'm still looking at the same range that matters. 1712, 1710, let's call it for round numbers, and 1790 something. So, and this is the orange line just for reference. So it depends on how fast I'm trading. If I'm really trading intraday, then I need to get more granular. So there's a little open gap down here at somewhere around $17 area. But to get there, I would have to lose this trigger point, 1721 and 1773. I'm rambling out numbers, but they're actually levels that are I can find them on the chart. So back to the daily. What about the long-term view of this chart? So I would go to the weekly to get some perspective. So now you see why I'm excited about that orange line. Last year I had a bet that was, this one would have a eyeball target before I measure it, somewhere above 24. So I don't disagree with the message yesterday from the TV, but I would like to wait for the trigger. Hopefully I would have time. If earnings were imminent, then okay, I would have to make the bet now because earnings is a pure coin flip bet over the short term, and it may be the trigger descended there already without me the opportunity of trading. But since it's trading ahead of earnings, I may still have the time to see if they want to take it. So I want to buy myself that time. So the idea is that if they've failed here a couple of times, and it was a huge ledge from back in March of 2018, so 2 years ago. So it's once they get back to it, I expect them to fail and then try again and fail. So if you look at it, it looks like a cup and handle. It probably looks like an inverse head and shoulders if you take a line up here. Nevertheless, it's attacking a neckline that if they take out the bulls, the buyers, go above it and test it for footing, they should have momentum to 24. I expect resistance at 20, let's call it, and 21.20. 21, let's call it between 21 and 22, because those are also prior to failure points, even bigger than the other ones, so more pointy. The point is, I see a message, I don't just jump on it. I should at least put my 2 cents into it. And let me show you my lines on this chart. Let me reset it. Okay, so these are my lines. So you see the green line, and this was the breakout last year. It was a confluence of several things. I don't even use Facebook. So the confluence of several things that are coming to a point, and I said once they break through it, the upside is probably $18 to $20. And it was unbelievable at the point. I got a lot of pushback on it, but nevertheless it came to fruition, and it was a nice ride. This time it's not a confluence of many things. It's just one breakout point. So I have less conviction than last year. Last year I had much better conviction, and the rally was fantastic. So here I even have less conviction, so I don't want to anticipate things. I would rather wait for the breakout. And here it is with my lines on board. So the good thing is that they're testing footing, and they're finding support at the footing, like the breakout necklines and all of that, on multiple time frames. So I'll wait for the breakout above my orange line to see if I can catch it on the way up. So those are my 2 cents on seeing a snap write-up or note from somebody, an expert, so to speak, and then me just chasing blindly. Again, I'm not trying to find a perfect entry point. I'm trying to find a bad entry point and avoid it. So I would rather buy above this neckline than anticipate it. But that also depends on personal preference, personal portfolio. Am I long too many things? Am I not long anything? So, and then I have to put that in context of the SPY. Why does that matter? Because markets trade in unison. So I don't think that the snapshots is going to go to 24 if the S&P is falling. I'm not saying the S&P is going to fall. I'm just saying they're at all-time highs. They're testing some footing. They're testing for footing, and they better not find a broken board somewhere. Like, I'm afraid for Netflix earnings. If they deliver a stinker, they could take the whole FANG segment down. And FANG has been so strong that fast money comes out of the market real quick. So why is that? Because they call them weak hands. If you have a lot of recent profits and you see a few red marks and you say, you know what, it was a nice ride, let me out. And they come out fast. So this is FANG gang, and they are about half of the NASDAQ, a little bit less. They can't be half. But they're heavyweights in the NASDAQ. And I would put Apple in there. I mean, Apple's run-up is fantastic. Okay, now I'm going off tangent. Anyway, so I'll do the Apple. So Apple has important lines below. I'm not saying it's going there. I'm saying these are lines that stick out to my eye. First line of danger is below 308. And then there's a little gap here and a whole bunch of lines on the way out. This orange line down here is for this period of time. Let's call it December on. This is where most of the buying and selling happened mathematically. So all these volume bars, this is the most, and this is the second most up here. So 280 sticks out to my eye. I'm not saying it's going there. I'm just saying there's too recent profits in there, which is a vulnerability. All right, Nick signing out.